Hi everyone, Larry Bailey here with Mortgage Workflow Partners bringing you another weekly market update. This is going to be all about April 28th, 2025 in review. There's been a ton of fresh data coming in. Economic updates last week revealed that the labor market showed some weakness. First quarter economic growth contracted and the Fed's preferred measure of inflation, aka personal consumption expenditures, slowed. Home prices continued their upward trajectory. What else is new? Here's what we're going to talk about today. You've got April jobs report looking beyond the headlines. The next story is private payrolls miss expectations. That story is followed by the Fed's preferred inflation measure shows progress. That's going to be followed with the story of home prices continue strong nationwide growth. That's going to be followed by other economic highlights. We've got a family hack of the week in here, and then we're going to tell you what to look for this week. So let's get into it. We've got the first one. This first story is all about the April jobs report, looking beyond the headlines. And if you're seeing this on screen, it's because you're seeing this at masteringeencompass.com. Thank you very much for checking that out. If you're listening to this on podcast, wherever you're listening to, head over to masteringeencompass.com and check out the full video. We'll see you there. So the story is April brought a surprise with 177,000 new jobs added, which is well above the 130,000 jobs expected. This is according to the Bureau of Labor Statistics, that's the BLS. The unemployment rate remains steady at 4.2%. Bottom line in this story is that while April's headline number appears strong, it's important to remember that these figures will be revised in coming months. Recent history suggests caution. So the first 3 months of 2025, they all saw significant downward revisions. January lost 32,000 on the revision. February lost 49,000 on revision, and March lost 43,000 on revision. If April follows this pattern, actual job growth may fall below the forecast of the 130,000. In addition, the BLS birth-death model, it's kind of grim, right? This estimates a small business job creation, adding a whopping 393,000 jobs in April. This sharply contradicts, of course, ADP's report showing small business just added 11,000 new jobs, suggesting potential overestimation. Another concerning trend is the average unemployment duration increased to 23.2 weeks, the highest number since December of 2024. This aligns with the ongoing elevation in weekly continuing jobless claims, pointing to persistent challenges in the labor market. All right, next story. Private payrolls missing expectations. So we see a little chart on here from ADP employment report. You can check that out there. Here's the story. We've got April private sector job growth coming in at just 62,000 positions, falling well short of the anticipated 115,000, according to ADP data. This represents the slowest hiring pace since July of 24, as economic uncertainty appears to be influencing employer decisions. Notably, large companies, which are 500 or more employees, they only added 12,000 jobs, which is a significant drop from previous months. Looking at industry breakdown, the leisure and hospitality led with 27,000 new positions, followed by trade or transportation and utilities with 21,000 new jobs. Both of these sectors face headwinds, of course, however, with tourism already slowing and goods shipments expected to decline due to tariff impacts. Wage growth recently remained steady, although it ticked down slightly to 4.5% from 4.6% last month. For existing employees, job changers experienced a modest increase to 6.9% from 6.7%. So wage growth is still kind of there, but not like it used to be. Bottom line in this story is that, quote, unease is the word of the day, close quote. That's according to ADP chief economist Neela Richardson. Neela went on to say employers are trying to reconcile policy and consumer uncertainty with a run of mostly private economic data. It can be difficult to make hiring decisions in such an environment, close quote. Thank you, Neela. Hey, let's talk about the Fed's preferred inflation measure. This is of course, the personal consumption expenditures. We see some changes. And we see some good news. Good news on inflation. The latest PCE report reveals headline inflation remained flat month over month while dropping to 2.3% year over year, down from 2.7% last month. The core PCE, which is the Fed's favorite inflation gauge, is now at 2.6%, moving ever so slowly to their 2% target. Meanwhile, consumer spending surged 0.7% in March, possibly as shoppers rushed to beat upcoming tariffs. Yes, tariffs. Bottom line in the story is shelter costs remain key to reaching the Fed's 2% goal, making up 18% of the core PCE. While these costs have stayed stubbornly high in official data, real-time rental reports from sources like Apartment List and CoreLogic show softer trends. As PCE catches up to these real-world rental conditions, we should see inflation numbers continue to improve. I think we've been hearing about that for a little while, so we'll see what happens. This next story is all about home price continues strong nationwide growth. We see some information on here on screen, nice little chart. And what we see is the Case-Shiller Home Price Index, widely recognized as a gold standard for tracking home values, reported a 0.3% seasonally adjusted increase from January to February, with year-over-year national home prices growing by 3.9% in February, slightly down from January's 4.1% gain. Major cities also showed even stronger performance, with a 10-city composite rising 5.2%, and the 20-city index up 4.5% compared to last year. This demonstrates that urban markets are outpacing the national average. In a separate report, the FHFA, that's the Federal Housing Finance Agency, in case you don't know these acronyms, that house price index showed a modest 0.1% monthly increase and a 3.9% yearly gain. Unlike the Case-Shiller, the FHFA's data only tracks homes with conventional mortgages and excludes cash purchases or loan amounts that are over the conventional limits. Bottom line here is the Case-Shiller reports that, quote, home prices have shown notable resilience, close quote, despite affordability challenges and high interest rates. This resilience means that homeownership continues to be a powerful wealth-building tool. For perspective, if you own a $600,000 home and appreciates 4% annually, you'd gain $24,000 in equity in just 1 year, which is great, but of course you can't get that money until you sell the house, so there's that. All right, let's keep on moving here. Next story is other economic highlights. Listen, we've got three things here within this story. We've got U.S. economy contracts. The U.S. economy declined 0.3% in Q1 25, according to the Bureau of Economic Analysis's Advanced GDP report. This contraction primarily stemmed from increased imports ahead of the tariff implementation and reduced government spending, partially offset by growth in investment, consumer spending, and exports. The next part of this is housing markets. Activity improves. We've got some pending home sales, which, as a reminder, are signed contracts on existing homes. That jumped 6.1% in February to March, marking 2 consecutive monthly increases. Go pending home sales. NAR's chief economist Lawrence Yun attributes this surge to lower mortgage rates in March and suggests that, quote, it implies a sizable buildup of potential home buyers, close quote. We'll see. And the next story within the story here is labor sector weakening. We've got initial jobless claims hitting their highest levels since February at 241,000, while continuing claims jumped by 83,000 to 1.916 million. This is the highest pace since November of 21. In addition, job openings fell to 7.192 million in March, continuing their decline from 2022 peaks. Remote work, as a reminder, may inflate these figures through multi-state postings, which are aggregated into this number of 7.192 million, potentially concealing even fewer actual openings. The job vacancies to unemployment ratio has dropped from 2.1 in 2022 to 1 to 1, signaling deteriorating labor conditions. So, yeah. So job vacancy to unemployment used to be job vacancy was at 2, unemployment was at 1, so that gives a lot of people places to go. Now we've got job vacancies at 1, unemployment people at 1, and it's actually pretty hard to get people back to work, as crazy as that sounds. Hey, here's the family hack of the week. We've got National Celebration of Strawberry Month here. These strawberry muffins are from Food Network. This recipe yields between 16 to 18 delicious muffins. So if you're a muffin person, check out this strawberry muffin recipe here. If you're watching this, you can take a screenshot and go make it. Let us know how you made out. If you're not seeing the screen, go check it out over at masteryandcompass.com. All right, so we've got what to look for this week. In a quiet economic week here this week, we've got the focus turning to the Federal Reserve meeting, which will feature both monetary policy decisions and subsequent press conference on Wednesday afternoon. We'll see what happens. My name's Larry Bailey. Thank you very much for listening. We'll catch you on the next one. Be well. Bye-bye.